Welcome to the deep dive. We are diving into a pretty important topic today, the U.S.-China trade relationship. More specifically, the trade war. We've got a bunch of different sources here looking at, economic data, on-the-ground accounts. Really just want to get a better picture of how this whole thing started, some of the key moments, and like what kind of impact it's had on the global economy. We'll go all the way back to China opening up its economy in 1978 up to today.
It's a period that has totally changed international commerce and geopolitics, you know?
Yeah.
If you really want to understand this trade war, you got to look past the tariffs and see like what was already happening in the global economy.
Okay, so let's break it down. To even begin to understand the roots of this trade war, we need to go back to China's economic reforms after 1978. It was a huge turning point.
Totally. Those reforms basically turned China into this manufacturing superpower. Then in 2001, China joins the WTO, and that just kicked things into overdrive. Their exports exploded, which helped the world economy grow. But of course, this also started to create these massive trade imbalances, especially with the U.S.
And, you can see those concerns in the numbers. By 2018, the U.S. trade deficit with China was a whopping $375 billion. I mean, with a number that big, it's obvious why this became such a big deal. What were some of the main things driving this imbalance at that time?
Oh, a bunch of things. China had this really efficient manufacturing sector,
Right.
much lower labor costs, and their production was just massive.
Mm.
And on the U.S. side, there's this huge demand for all these cheap goods. So you end up with this situation where the U.S. is importing way more from China than it's exporting. And the political fallout from a deficit that big for that long,
Hmm.
yeah, it was bound to happen.
So we have this growing deficit, and the U.S. also starts making some pretty serious accusations against China about how they're doing business. What were the main things they were upset about?
Basically, it boiled down to what the U.S. saw as unfair trade practices. You had allegations of intellectual property theft. U.S. companies felt like their tech was being copied left and right. Then there were concerns about forced technology transfers. The idea was that if a U.S. company wanted to do business in China, they were being pressured to share their tech with Chinese companies just to get access to the market. And of course, you have the issue of state subsidies. The Chinese government was basically giving their own industries a ton of financial help, which obviously gave them a leg up in the global market.
This wasn't totally out of the blue, though, was it? I mean, wasn't Obama's pivot to Asia an early sign of this growing tension?
Yeah, the pivot to Asia definitely showed that the U.S. was getting more and more focused on the Asia-Pacific region. They saw China's growing power, both in terms of economics and global influence.
Mm.
And while it wasn't a trade strategy specifically, it was a sign that things were shifting. Then, under Trump, the America First policy took a much more direct, in-your-face approach, and trade became a central part of that.
It did feel like a pretty big change. And talking about China joining the WTO, we have a quote here from economist Linda Yeo. She said, China's entry into the WTO was a double-edged sword. It fueled global growth, but left industries in the West reeling. That sums up the complexities of that period pretty well, doesn't it?
Absolutely. I mean, yeah, consumers in the West got cheaper goods, but some industries here really took a hit, right? Jobs went overseas and factories shut down. And those people who felt left behind, they helped create the environment where these trade complaints could really resonate.
Right. So we've got this backdrop of a huge trade deficit and these accusations that had been brewing for a while. What was the thing that really kicked off the trade war?
Well, the first big move came in March 2018. The U.S. used Section 301 of its trade law to slap a 25% tariff on $50 billion worth of Chinese goods. And the key here is that these tariffs targeted high-tech industries, things like robotics.
Those are the industries everyone sees as being key to future growth and, who leads in technology, right?
Exactly. By going after those sectors, the U.S. was trying to tackle the intellectual property theft and also slow down China's progress in these really important areas.
Yeah.
It was a way of saying, hey, we see what you're doing, and we're not going to let you just take over.
And China's response was pretty immediate and well thought out, right? They weren't just throwing random tariffs back at the U.S.
No, they knew what they were doing.
Yeah.
Their retaliation was really strategic. They hit back with their own tariffs on U.S. goods, specifically things like soybeans and airplanes. The soybeans are interesting. I mean, hitting those really affected Trump's base in rural America. What do you think that tells us about China's strategy?
It seems like they were trying to pressure the U.S. in areas that were politically sensitive, showing that the trade war was going to hurt people in the U.S. and maybe even change how the U.S. approached the negotiations.
Exactly. It wasn't just about hitting back economically. There was a clear political angle.
Yeah.
And the tariffs on airplanes, well, That was a shot at a major U.S. export. This back and forth kept going. By 2019, the U.S. had really upped the ante, putting tariffs on a massive $550 billion worth of Chinese imports.
And China came back with tariffs on $185 billion worth of U.S. goods. It became this like spiral of tariffs, each side trying to force the other to back down. And then you could even see the impact on the stock market. I remember those reports of the Dow Jones dropping something like 600 points after one of those escalations. What does that tell us about how the markets were reacting to all of this?
Well, it showed that this trade war was creating a lot of uncertainty in the global economy. Businesses, they need to be able to plan, to know what's coming next. All these tariffs were making things so unpredictable. Companies were putting off investments, supply chains were being disrupted. Everyone was worried about what could happen next. It also just shows how closely connected trade and the financial markets really are.
And beyond, like, the big market moves, there were real people who got hurt by this. We heard a story from John Smith, a soybean farmer from Iowa. He said prices dropped 20% practically overnight, he said. We were collateral damage. His story really highlights the personal cost of all of this. What kind of impact did this have on U.S. agriculture overall?
Farmers, people like John Smith, saw their income drop, and they just didn't know what was going to happen next. These tariffs created a surplus of soybeans in the U.S., which meant prices went down. And this wasn't just bad for farmers. It affected the entire agricultural supply chain and all those rural communities that depend on farming. It also meant the U.S. had to find new places to sell their soybeans, which wasn't always easy or profitable.
Okay, so we've got this escalation of tariffs and we're seeing some of the immediate consequences. What was the broader economic impact on both U.S. and China?
In the U.S., any industry that relied on parts from China, their costs went up. A lot of the time, those costs were passed on to consumers. So suddenly, lots of things just cost a little bit more. A study by the Federal Reserve estimated that the average U.S. household was spending an extra $831 per year because of these tariffs. That's a real impact on people's wallets.
And what about China? How did it affect their economic growth? They export so much, they must have felt it too.
Oh yeah, for sure. Their economy kept growing, but things definitely slowed down. In 2019, their GDP growth was 6.1%, the lowest it had been in like 30 years. Now, compared to other countries, that's still pretty good growth, but it was a sign that the trade war was taking a toll.
It's interesting to think about whether anyone actually benefited from all of this. It always feels like a lose-lose situation, but were there any other countries that came out ahead?
Yeah, you're right. There were definitely some winners. Take Vietnam, for example. Their exports to the U.S. jumped by something like 35%. This was partly because companies started looking for other places to make their products to avoid those tariffs on Chinese goods, so they moved production to Vietnam. It just shows how adaptable global trade can be.
And looking at the big picture, what was the estimated impact of the trade war on the global economy as a whole?
Even before the pandemic hit, the IMF, the International Monetary Fund, was saying that this trade war could shrink global GDP by around 0.8% by 2020. That gives you an idea of how much damage this was doing. These were the two biggest economies in the world going at it, and it was dragging everyone down.
It felt like the whole thing became about more than just tariffs on stuff you could buy in a store, you know? Technology really became the main battleground.
Absolutely. The fight for who would lead in technology was becoming more and more intense. The U.S. blacklisting Huawei was a big part of that. Basically, they cut Huawei off from getting key technologies, especially semiconductors, which really hurt Huawei's business worldwide.
And this was happening at the same time China was pushing its Made in 2025 plan. What was China hoping to achieve with that?
Made in 2025 was a plan by the Chinese government to make China the global leader in high-tech manufacturing by, well, 2025. They wanted to be the best in fields like AI, robotics, advanced materials, basically all the really important tech of the future. They wanted to be able to do it all themselves and be the best in the world at it.
So the U.S. going after Huawei and other Chinese tech companies, that was partly a response to this, right? They saw it as a threat to their own leadership in technology.
That's a huge part of it. The U.S. saw Made in 2025 as a direct challenge, not just to their economy, but to national security. If China controls the tech of the future, that gives them a lot of power. So the U.S. started taking steps to keep China from getting ahead and to try to boost American innovation.
And that's where we see the U.S. launching things like the CHPS Act in 2022. What was the goal there?
The GPS Act was basically a huge investment, something like $52 billion, to rebuild the U.S. semiconductor industry. The idea was to encourage companies to build chip factories in the U.S. instead of relying on other countries, especially China. They wanted to make sure the U.S. wasn't dependent on anyone else for this crucial technology.
We have this quote from former U.S. Attorney General William Barr. He said, "Who controls 5G controls the future." It really shows how important this fight for tech dominance is. What makes 5G so important?
5G is going to be the foundation for so many things. Think self-driving cars, smart cities, even factories that run themselves. The country that leads in 5G will have a huge advantage in all those areas, not just economically, but strategically.
After all this escalation, things calmed down a little bit with the Phase 1 deal in early 2020. What was in that deal?
Yeah, the Phase 1 deal, signed in January of 2020, was kind of a step back from the brink. China agreed to buy an extra $200 billion worth of U.S. goods and services over 2 years. The U.S., in return, agreed to lower some of the tariffs.
Did China actually stick to that, though? Did they buy all that stuff?
Well, not really. By the end of 2021, when the Phase 1 deal was supposed to be done, they'd only bought about 60% of what they had promised. The pandemic definitely messed things up, but they still fell short.
And importantly, the Phase 1 deal didn't actually solve those core problems that started this whole thing, did it? Things like state subsidies and intellectual property theft were still there.
Exactly. It was more of a time out than a real solution.
Yeah.
It helped with the immediate trade numbers, but it didn't fix those underlying problems in the U.S.-China economic relationship. So all that tension, all the stuff that could lead to another conflict, it was still there.
So where are we now? We have a different president. Has the U.S. changed its approach to China and trade?
Well, under Biden, most of the tariffs from the Trump era are still in place. But there has been a shift in strategy. It's not just about going it alone against China anymore. The U.S. is now focused on teaming up with other countries, especially in the Indo-Pacific region. Things like the Indo-Pacific Economic Framework are a part of that. What do you think the goal is there?
It seems like the U.S. is trying to build a team of countries that are all on the same page when it comes to trade and security, especially when it comes to China, and also to have other options so they don't have to rely on China for everything.
Right. And we're still seeing signs that the tech rivalry is still going strong. Those chip export controls from October 2023 are a good example. Those are basically making it even harder for China to get those advanced chips.
Are there any signs that things might be getting better between the U.S. and China, or are they just going to keep fighting over everything?
It's interesting. Climate change is one area where they both have a reason to work together. Even though they disagree on so much, they've kept talking and working together on climate issues. It shows that even when countries are rivals, they can still find ways to cooperate when it comes to global problems that affect everyone.
We have one last expert take here. This is from economist Adam Tooze. He says, "The era of hyperglobalization is over. We're in a fragmented world." That seems to capture what this trade war really means in the grand scheme of things.
I think he's right. The U.S.-China trade war was a big part of this shift away from a world where everything was connected. It showed that being so dependent on each other can be a problem, and it's pushed countries to become more regional, more focused on competing with each other.
So looking back, the U.S.-China trade war wasn't just about tariffs. It's changed how global trade works, and it shows just how tangled up economics and geopolitics really are in the 21st century.
Absolutely. It's a reminder that when powerful countries do business with each other, there's always a bigger game going on. It's not just about money. It's about power, influence, and all those things that come with it.
It makes you wonder, in this world where things are breaking apart, can rivals like the U.S. and China really get along without some kind of economic separation? It's a tough question, and there's no easy answer. Thanks for joining us for this deep dive.